Welcome one and all, and by the grace of God we are back for another week to take a look at the Daily Horizon View. The date today is the 29th of the 7th, 2019. As always, we are taking a tour of the ASX Exchange Traded Funds. Our top fives we will be reviewing shortly. Our spotlight today is on IDH, which is the iShares S&P ASX Dividend Opportunity ETF. Interesting little ETF, so hang around to the end to get some more information on that one. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay, people, let's cast our eye across the top 5 percentage rises for the day. Number one here, we saw QRIHD, which is the spotlight, so hang around for that one. ETPMPT, IJR, and GEAR. So QR is the ETF's S&P Biotech ETF, and that one tracks the S&P Biotechnology Select Industry Index. That one has a market cap of roughly $5.5 million. We saw a percentage rise today for QR of 2.3%, which equated to $1.18 on a reasonable volume of 1,100 shares traded. The top 5 percentage falls, let's cast our eye over that one. Now we see VAP, IKO, IZZ, HJPN, and REIT, REIT. So VAP is the Vanguard Australian Property Securities Index ETF. That one has a rough market cap of $1.3 billion, I should say. Dividend yield was roughly 8%. I think that's changed recently, so something, if you guys are doing any further research on that one, to have a look at. Morningstar give this one a gold rating, which is effectively 5 out of 5 stars. Today we saw VAP down 1.76%, which equated to $1.65 on a healthy volume here of 42,600 shares traded. So definitely property and property ETFs definitely out of favour today. Let's take a closer look at the top 5 dollar rises for ETFs here. SPY number 1, IVV, IJH, BTS, and lastly but not leastly ETPMPT. So for those who may have forgotten, SPY is the State Street Spider S&P 500 ETF Trust. And that one, as the name suggests, tracks the S&P 500 index. One of the smaller ETFs to track the S&P 500. That one has a market capitalization of roughly $31 million. You get a smallish dividend yield here of 1.76%. Keep you in front of inflation or thereabouts. So today we saw a increase in the price of SPY of $3.80, which equated to 0.88% on a very low volume of 83 shares traded. Okay, time to have a look at the top 5 dollar falls. Number 1 here we had VAP. Up next was IHEB, IKO, IAA, and IZZ. So we won't spend any more time on VAP, which is the Vanguard Australia Property Securities Index. We saw that one had a fall in the share price of $1.65. Not the best day for good old Vanguard Australia Property Securities Index. As mentioned, the volume wasn't too bad for that one. It's one of the larger ETFs on the market. So property and property ETFs on the nose. Okay, let's cast our eye over the top 5 number of trades for ETFs on the Australian market here. So we saw VAS with number 1 spot, then followed up by VAP, STW, IAF, and lastly here VGS. So VAS, for those who may have forgotten, is the Vanguard Australia Shares Index ETF. That one tracks the S&P ASX 300. Rough market cap here for this one is $3.5 billion. You get a reasonable dividend of roughly 4.54%. Morningstar rating for this one is bronze, which is effectively 3 stars out of 5. We saw a number of trades today for VAS, 290. On the upside, we saw a rise in the share price of 43 cents, which equated to 0.5% gain in the price of the shares for this ETF. Top 5 for volume. We saw AAA, IOZ, VAS, FAIR, and VACF. So AAA is the BlackRock Australia High Interest Cash ETF. This one's been quite popular lately. So the managers invest funds money in high interest deposit accounts in Australia with banks such as ANZ, CBA, and NAB. This one has a market cap of roughly 1.5 billion and climbing. This is quite a popular ETF over the last sort of 6 to 12 months, and it has proven to be popular currently as well. This one has a dividend yield here of 2.03%. Morningstar rating of neutral, which is effectively 2 stars out of 5. AAA, we saw a volume today of 161,400 shares traded. Effectively flat. We didn't see a rise in the share price at all. So opened at $50.13 and closed at $50.13. So AAA is quite popular for people looking for an alternative to putting their money in the bank. If you look at the dividend yield here, that's higher than what you'll get as a bank interest rate now. Top 5 for value. Looking here at VAS, AAA, VHY, and VAP, and followed up here IVV. So pretty much when I talk about value, it's just the number of shares traded by the share price, which gives you the total value of the shares traded, whether it's on the negative or positive, it doesn't matter. It's just like a total value of the shares traded. So VAS, as we've touched on before, is a Vanguard Australia Shares Index ETF. Today we actually saw effectively a dead heat here with VAS and AAA actually, both trading roughly $8.1 million today. As mentioned before, AAA is quite popular as a substitute for putting your money in the bank, so that's a high interest cash ETF. So people are definitely using that one as a substitute for a bank account. Okay, let's cast our eye over the Spotlight today, which is IHD, which is iShares S&P ASX Dividend Opportunities ETF. The fund aims to provide investors with the performance of an index before fees, expenses, and blah, 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 composed of high-yield Australian common stocks listed in the ASX. So the index is the S&P ASX Dividend Opportunities Accumulation Index, and that provides exposure to 50 ASX listed stocks that offer high dividend yields while meeting diversification, stability, and tradability requirements. As usual, we want to look at the Y factor. So it gives us exposure to 50 of the high yielding Australian equities. So when equities are in businesses. So it gives you quarterly income across the sectors, target quality income while avoiding dividend traps. So this fund's had a hit and miss record on that one. So they changed the selection criteria in 2015 to try to tighten up this, and I think that might be some of the issues with the performance. When we have a look at the charts later on, you'll be able to see that I don't think it's quite performed at a level that it should have compared to the rest of the market. Okay, let's cast our eyes over some numbers. We've got a net asset value of $14.40. Closed out today just above that, $14.65. Market cap of $254 million. Management cost per year of 0.3%. Distribution frequency is quarterly, so January, April, July, October. Dividend yield is pretty healthy, 5.32%, which is what you expect. Chasing those dividend stocks in Australia. So by owning IHD, will give you access to 50 dividend-paying companies just by buying the ETF. So effectively, if you buy the one share, you get the whole lot. So if you own IDH, you will only ever find high-yielding companies in your portfolio. So, you know, if income's what you're after, this is might be an interesting one to look at. So if a company ceases to pay a dividend, it will be removed from the ETF and replaced with another that does. So within the ASX 300, if one of those stops paying if one of those 50 stops paying dividends, so one drops out and one comes into the holdings of the ETF. So since inception, IHD has not performed that well, which I touched on before. It looks as though it's lagged the overall market with an annual return of roughly 5.36%. I think that's quite possibly due to the fact that they weren't picking those dividend traps earlier on. So they, as mentioned, they changed the screening criteria for choosing companies in 2015. It looks like it's performed a little bit better since then, but overall it's still down because for the first 5 years it just lagged a bit. This is not an ETF that I would be buying for capital appreciation. As mentioned, I think there's been some problems with this one, so it's probably one that I would stay away from right this moment. I'd have a look at HVST or RDV. There are some interesting options to research. So I can look at the top 10 here: Rio, Wesfarmers, Combank, South 32, Macquarie, Fortescue, APA, Illumina, Tabcorp and Suncorp. All the usual suspects for that one there. So I mean, on the right hand side you can see your graph. So over 10 years, you expect the average return on the market is about 9.6 to 10%. So really you're getting, just if you'd invest in this one from inception, which is what was it, late 2010, you're only getting a cumulative returns of just over 50%. So probably not one that I'd look at or I'd use as part of dividend or income strategy. So yeah, it's not one that I'd bother looking at. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational, and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing, and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.